The way you use credit cards and the way you build your credit score has ripple effects on your financial health long term. In this video, I'll touch on the background behind why many people might have a very valid fear of credit cards, why it's advantageous to have a high credit score, how to get a high credit score, and also I'll touch on common fees that might come with a credit card and how to get out of paying them. If you're new here, I'm Carly. I'm a PM in tech, and on this channel, I share my knowledge around personal finance, and I also talk about modeling as a side hustle. So let's dive into the fear around credit cards. Historically, people have been afraid of opening credit cards because they don't want to go into debt. That's a very valid fear considering most credit card interest rates are over 20%, which means that if you don't pay off your balance in full every month, the interest you accumulate grows at over 20% of your balance. But as long as you pay off your card in full every month, meaning that you have the money in the bank account to pay off whatever you bought that month, and you do, then credit cards are an incredible tool to get ahead financially. And the reasoning behind why I think everyone needs a credit card is primarily tied to credit score. But before we dive into that, let's touch on why we need to have a high credit score. A high credit score makes your life much easier on many different fronts. You might get better car insurance rates, you might have better negotiating power with banks, you might get lower interest rates on loans, and you might also get your first choice in housing if you rent. That's the main benefit I've experienced, given that I haven't taken out major loans aside from student loans. If you're renting an apartment, the landlord will likely take into account the credit scores of their prospective tenants. So if you have a high credit score, you're likely to get your first choice on the apartment that you want. Honestly, I likely wouldn't be able to rent my apartment here in New York if I didn't have a good credit score. In fact, I had an acquaintance who was looking to rent in New York. He had a roommate who was international. So this person didn't have a credit history in the US at least. Even though they were high earners and could very well afford any apartment that they were applying for, they still had a tough time looking for apartments because to the landlord, they were very risky tenants because one of the pair didn't have a credit history. Even when it comes to buying a home, many of us will take out a loan to purchase the home. The lender from whom we borrow money will rely on credit scores as an indication that the borrower will actually pay back the loan. If you have a low credit score, they consider you more risky to lend money to than someone who has a high credit score. So the lender will likely charge a higher interest rate on the loan. Given that the price of homes is in the hundreds of thousands of dollars and the average loan period is 30 years, even if your interest rate is 0.5% or 1% higher than it would be, over 30 years you could be paying tens of thousands, maybe even hundreds of thousands of dollars extra because of a low credit score. And if your credit score is really, really low, then you might not even qualify for a loan. And before we continue, if you like this video so far, please like and subscribe so that you can see more of these videos. So now that we know the importance of a high credit score, how do we build a high credit score? Some of the most common strategies you can use to build a high credit score include making your payments on time, keeping your credit utilization low. That basically means how much credit you're using versus how much credit you're given. The average age of your credit history will also play into your credit score. Also, the mix of different types of loans. So they could be student loans, car loans, credit cards, etc. The number of new inquiries will also make an impact on your credit score, and ideally you want to keep those low. And a new credit inquiry happens every time you apply for a new credit card. A lot of these points I mentioned are a little bit more passive. Some of them are based off of how long you've had your credit history open for. I'll dive deeper into the more active ways you can build your credit score. First, you'll want to build credit history. That could be a car loan, that could be a mortgage, a personal loan. But these are generally big decisions, and these loans are generally also a substantial amount of money. If you aren't in a position to take out one of these large loans, and that's generally the case if you don't even have your first credit card, that's where the credit card comes in. A credit card is essentially a loan on the things you buy every day, and you pay off this loan in full at the end of every month. And that's one of the key ways to build your credit score because you have one payment history. You're also building the length of your credit history. And ideally, as I touched on before, you have a low credit utilization rate. And speaking of credit utilization, this is a key part in building your credit score. You'll want to keep your credit utilization low by spending no more than 30% of your allotted credit. So if you open a card and your credit limit is say $10,000, that means on a monthly basis, you'll want to spend no more than $3,000 that month. If you need to spend more and you can afford it, then you can call the bank and ask them to extend your line of credit, which is generally very easy to do, or you can open a new credit card. All of your credit accounts will be accumulated for your credit report, but remember to do everything responsibly. So that being said, a low credit utilization will raise your credit score over time. The really financially savvy parents will open up a credit card account for the kids as soon as their kid is born. The child will generally generally be added as an authorized user on the parent's credit card account. The parents might charge on a monthly basis a small amount to the card and then pay it off in full. Then when the child turns 18, they will have an extra 18 years of credit history compared to someone who just opened their card at 18. If you're opening your first credit card yourself, make sure it's a no annual fee card. It's ideal to keep your first credit card open for as long as possible because it raises the average age of your credit history. My next point is around practical reasons why you should have a credit card. So every year, maybe every 2 years, I see a charge on my statement that I know I did not make. If someone overcharged you or someone scammed you on your credit card, you can submit a dispute with the bank. Credit card disputes are much easier than a debit card dispute because with a credit card, you haven't lost the money yet. If you were mischarged on a credit card, that was charged to a line of credit, and you can simply tell the bank, that charge was not me, and the bank will handle it. With a debit card, the money is already taken out of your checkings account, so you're fighting for your own money back. On top of that, I think there's a specific time limit for which you can claim fraud too, so that complicates matters a little bit also. So with a credit card, you have less risk than with a debit card. And on top of that, you're building credit history and you're accumulating points. That brings me to my next practical reason why you should have a credit card. If you look closely, there can be some great perks to having credit cards. The most common types of rewards might come in the form of cashback or credit card points that can be redeemed for travel, for hotel stays, sometimes even for cash. If you're interested in opening a new credit card, I would highly recommend Googling best credit card for whatever you're trying to optimize for. And that could be for travel, that could be for cashback, or for building credit. If you're not willing to pay for an annual fee, then you can specify that too. Right now, I have a few credit cards. They all optimize for different things. Some of them are for everyday purchases, some of them are for rent, some might be for restaurants. I don't currently have a card with an annual fee because I generally try to buy as few things as possible, and most of the benefits don't always align for me. For example, some of the more high-end cards have the perk of 5 times the points back on Lyft or Uber rides. I don't normally take rideshare, so I can't really count that into the value of the card. I would like to travel more, so at some point I might think about getting a travel card with an annual fee as an investment. If you don't trust yourself with a credit card, which is valid, then you can also put a physical limit on your credit card, so you cannot spend more than the limit that you set. You can charge expenses that you would have purchased anyway, like groceries or any subscription services, and then just pay that off at the end of the month. That way you're building your credit history, you're building your payment history, while also earning points at the same time. There are fees associated with credit cards, but the only fee you should be paying is the annual fee if you have an annual fee card. Any other fee you should not be paying. To make sure you don't incur any other fees, just pay your balance on time, pay it in full every month. There are foreign transaction fees as well for some cards, so make sure you're not using certain cards in international countries. If you get charged a late payment fee or you get charged interest on a late payment, these are all fees that you can negotiate as long as it's been your first handful of times that you've incurred these fees. I think I've incurred all of the fees I've mentioned, and every time I've just called my bank and they've always taken care of it. Even for the annual fee though, I used to have a card with an annual fee, and I had heard of people calling in to the bank to negotiate a lower rate when they renew their card. I tried it. It personally didn't work for me, so I downgraded my card to a no annual fee card, but I know that it has worked for other people. Credit cards should be used to your advantage, first and foremost to raise your credit score, and also to reap the benefits of points and rewards. If you haven't already, you should open a credit card as soon as possible so you have as extended of a credit history as possible. This is especially important for your first few years into adulthood, and this will also set you up for later milestones in your life, like renting your first apartment or buying your first home. Don't spend more than you can afford and pay off everything on time every month. Just make sure that you do not get into credit card debt because it's not worth it. That's all for today. If you like this video, please like and subscribe. And you might also be interested in this video here on all of the reasons why you should be practicing financial self-care.